The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick. These are your headlines. French Prime Minister Michel Barnier gambles his government, pushing through a contested budget bill, rattling financial markets and opening himself up to a no-confidence vote as soon as tomorrow.
I believe that we have now reached a moment of truth which confronts everyone with their responsibilities. It's now up to you, members of the Parliament of the nation, to decide whether our country adopts responsible financial texts essential and useful to our fellow citizens, or whether we enter uncharted territory.
The S&P 500 and Nasdaq kick off the month at fresh record highs. The strong lead pulls Asian stocks into the green, with technology outperforming.
Well, talking to be now, Intel opts to part ways with CEO Pat Gelsinger as the crisis at the US chipmaker deepens, whilst the Biden administration launches another crackdown on the sector, enforcing new export controls that stymie China's chip ambitions. And a US judge upholds a decision to deny Tesla CEO Elon Musk a record-breaking $56 billion pay package. That's despite the shareholders actually voting to reinstate it.
Good morning, how are you?
Good morning. Well, thank you.
This story you're about to read, there's one element of it which I don't know if it's in your read because I haven't checked your read, but it just makes me, if you had a crisis at home, I mean, there's never a crisis at home in the good ship show. I'm sure it's always very smooth running.
I'm sure there
is. But let's say you had the option to, I don't know, go to the Cotswolds for a weekend with the girls, but there's a crisis at home. I don't know what it is. There's a flooding or something, or the family's kind of like, there's a rebellion against homework or something really, really big going.
We're talking about things on a daily basis, aren't we?
But you would kind of say, no, I'm going to be at home. I'm going to be at home to handle the most important matter. I can go with the girls to one of those amazing places you go to, like Soho House or something, on another occasion. You did think that. You'd get your priorities right, wouldn't you?
What we're talking about here is cancelling Davos, aren't we? In terms of priorities, what is the biggest thing that you have on a work basis ahead of you for this year?
I think for next year, yes.
Yes,
Davos,
we would probably say would be Davos.
Yes, exactly.
So you're talking about a big crisis at home that would force me to turn around and say, I'm not going to Davos.
But what if it wasn't as big as Davos? What if it was just like an outside broadcast in Basel or something for some minor tech conference? You'd kind of give it up just to do the real crisis at home, wouldn't you?
Absolutely.
That's the priority.
Yes, absolutely.
But then you're not the French president.
No, that's true. And we've got to talk about French politics, as the French Prime Minister Michel Barnier's government is on the brink of collapse, less than 3 months after he was appointed to the role. Opposition parties have submitted motions of no confidence after Barnier triggered Article 49.3 of the French Constitution.
Calme-toi. You have to say that in a very Gallic accent.
You can do the 60 billion here too in a Gaelic accent, allowing him to pass a 60 billion euro spending bill without parliamentary approval. Addressing lawmakers at the French National Assembly, Barnier said he was taking responsibility for his actions.
C'est pourquoi, sur le fondement de l'article 49,
This is why, on the basis of Article 49, paragraph 3 of the Constitution, I hold the government, my government, responsible for the entire Social Security financing bill for 2025, in its version resulting from the work of the Joint Committee and modified by the editorial and coordination amendments tabled. I do it by calling for the responsibility of each of the representatives of the nation that you are, even if you have to leave this hemicycle, convinced that our common mission beyond our differences is to serve France and the French people. From now on, ladies and gentlemen, everyone must take their responsibilities, and I take mine.
A look at French yields that have been showing some heat, and we're still around the 2.91% level at that 10-year, 2.35 at the short end. And as we talk about the instability that we're seeing in the political sphere, it is impacting some of the numbers we're seeing on the ground economically, so hence the impact at the short end of the curve, 2.13 at the 2-year. And a quick look at the spread that we're seeing between bonds and OATs, where there's been a widening out of spreads, and this is what it looks like at this hour. Let's get to Charlotte for more. Charlotte, tension motions on one side, no confidence on the other. Michel Barnier is a man that the international audience knows well because he helped negotiate Brexit for the Europeans. Is he taking a stand here? Is he failing to negotiate like he did all those many laborious months over Brexit? Is this quite a different Barnier we're seeing?
No, look, he negotiated for a while, and there were some concessions made last week. You remember, because of the concession negotiation, they're basically with the far right. They are the key players there, because the left wing always said they would table a vote of no confidence against the government if they were triggering the 49.3, so try to push through the bill without a vote. The question was always try to appease the far right. They were the kingmakers there. And so they made some concessions, the electricity tax that they scrapped last week. Yesterday, there was a last-minute concession, one of the other red lines from the far right, which was on the reimbursement of drugs. In France, you pay for your medication and you get refunded afterward, and they were going to reduce the amount that you get refunded, and then they scrapped that as well. So no, they made some of the concessions. There was one final concession that they didn't make on the indexation of pensions that would start in January rather than later in the year. That was one of the red lines that the far right had mentioned. But they thought, I guess, that they had made two very public concessions that then the far right would accept, making their own concession and not accept that this final concession was made. And it feels like they tried to call each other's bluff until the very last minute. And then when he stood at that podium, I think the far right was still waiting to hear that maybe he was announcing this final concession. Until the last minute they were waiting. And then he didn't. And he pulled the 49.3, and straight away the far right came out saying that if there is a vote of no confidence, that they would support it. So now that vote is expected to be tomorrow. And looking at the numbers and from what everything have said, the different political groups, it looks like the government will fall. And then we entered uncharted territory.
Just to circle back to where I cryptically came in saying hello to Karen.
The Saudi trip. I think it's hardly a holiday.
I didn't say it was a holiday.
Well,
no, I said if Karen had something else booked that wasn't essential.
Yeah. I mean,
if there is
they're talking about peace in the Middle East, the ceasefire in Lebanon.
Come on, Charlotte, you know how politics works. It is incredibly calculated not to be there at the key moment of crisis.
At the same time, he will be back tomorrow evening, potentially to try and pick a new prime minister.
He'll be back tomorrow evening. By then, this crisis will have evolved.
The talks and the thinking and the phone calls with who could be picked next for prime minister are already happening wherever he is.
The French president, at the moment of maximum crisis, that is arguably his creation, is in Saudi Arabia, rather than trying to knock together the heads of these key three groups in France. The optics are going to be damning from the French press. You know that as well as I do.
The state visits are planned months and months in advance. So, cancelling it at the very last minute would then send a signal that it is a deep crisis.
Yeah, maybe it would signal there's a crisis going on at France with a budget deficit which is twice the agreed level, and French bonds potentially teetering.
Look, 49.3 have been triggered 110 times since 1958. This in itself, not a big deal. The problem is those votes of no confidence, there only one time it's ever been successful since 1958. It's been successful once in 1962, and that's it. And it toppled the government, and then a prime minister was named again as prime minister, and that was it. So, we're entering uncharted territory in the sense that then we don't know what happens next. That prime minister, Barnier, if he's ousted tomorrow, he would have lasted only 3 months. The previous prime minister lasted only 6 months, and was Gabriel Attal. That was cut short because of the snap election. The previous was only 18 months, so it's getting shorter and shorter. And why is that? Because of the fractured politics. And the National Assembly, as it is, will remain the same until next year. So good luck trying to pick who could be the next prime minister, because they will have to deal with the same National Assembly, and trying to find a majority out of 3 blocs that don't have anything in common and don't agree on anything. They haven't learned to do politics in a different way. When the snap election happened, they say they will have to learn the different parliamentary tradition that we see from other countries, learn to do coalition, learn to do compromise with other parties.
Yes.
They didn't learn to do that. So, and Charlotte, they stood it all in their line, and there's been no compromise.
It feels like there was this grand plan all along from Macron, trying to let the population see what it looked like to have the far right involved in politics, but also perhaps the left coalition and the far left to give them a sense of what happens. Is this helping Macron's long-term vision, do you think? Is it helping provide a view that, look, it's chaos. If you get the populace in, you're not going to get any decent running a government? Is that one of the takeaways, or is it just that the population is now getting very angry with the centre ground too?
Certainly, it is a strategy now by the government to point the finger at the far right for being now responsible of the potential chaos that might unfold. And for a long time, Marine Le Pen, she said she doesn't want to be an agent of chaos. That's why they didn't support the previous vote of no confidence. They gave that chance to the Barnier government, and that gave them a lot of influence on the potential agenda, including on immigration, not just the budget, but on the political issues as well. Now the government is pointing the finger at them, saying they are the ones being irresponsible with what's at stake in the country, that they're playing party politics and that they don't have the bigger picture, what's happening in the financial market, etc. at stake. One thing to remember is that 2/3 of the voters of the far right are in favor of supporting a vote of no confidence. So she's talking to her voters. So you can't blame a politician for doing that, but certainly the bigger picture is kind of being ignored.
Now, look, the fact of the matter is the Macron was unlucky. I appreciate that, and we've talked about that a lot. He was unlucky that there was a global pandemic and a devastating war on the European continent in his first term. I appreciate that, and that's why he gets some grace on this one as well. But you can't keep blaming two extraneous factors for the fact that he has failed to get down the budget deficit and get down the percentage of public spending as a percentage of the broader GDP in France. You can't keep blaming the same two factors when other countries have actually managed to have some rationalisation of their deficit, of their budget, who have actually taken the hard miles as well. Now, I'm not necessarily blaming him, but I'm pointing out the fact that Macron has failed in his key objectives to run balanced books, or certainly more financially responsible books, and ergo, one can't blame the right wing, one can't blame the left wing. You have to take responsibility as the leader of the French Fifth Republic.
But you can blame him for the snap election, and that's where we're at. And
completely blame him for that as well.
That's where we're at now. Is that what events all countries
went spectacularly wrong. Ergo, why we're in this crisis
now. And there
now.
was no need to do it. It's not because there was a European election that showed the far right in the lead that you needed to bring this domestically. We know that European election and domestic elections are very different, and the results of the parliamentary election did show that the far right didn't come in the lead. So that was his responsibility fully, and now we're in this situation. And he was talking about calling this election for a moment of clarification. Well, look,
and if anyone thinks I'm just French bashing this morning,
this year was supposed to be the reopening of Notre Dame, the Paris Olympics,
and it looks stunning. By the way, let's talk about that. It looks phenomenal. I have seen. Oh my goodness, have you seen it? The interior. I went to Notre Dame decades. It was dirty. It was like an old dusty museum. It smelled. The new Notre Dame. It looks phenomenal. I'm really excited about visiting.
And it was supposed to be a symbol, including for Emmanuel Macron politically. He wanted to use that something he promised 5 years ago. They rebuilt and they did it. The Paris Olympics, the growth, coming out of all this crisis, the reforms potentially kicking in. It was supposed to be a time where the interest rates coming down. That was a time when things would be an uptick, and a lot of economists expected France to kind of start doing better now. And then this happened, and it's a self-made wound. And now we kind of try to see what happens next. But there's
great shame. Thank you for your passion on this story as well. Do you want to say it one more time?
The 49.3. Oh, we're going to say it a few more times.
No one can say. I can't say it like that. That's for sure. 49.3. No, not quite. Coming up on the show, US shoppers on track to deliver a record day of Cyber Monday sales. We'll break down the numbers. Plus, Intel CEO Pat Gelsinger apparently ousted by the chipmaker's board as it loses faith in his turnaround plan. And we'll bring you the latest check on global government borrowing as the IIF releases my personal favourite of data every quarter. It's the Global Debt Monitor report. The CEO, Tim Adams, will join us exclusively at 8:30. That is 8:30, not 49.3.
Look at the US market yesterday, and it was a mixed finish. So the Dow peeling back from some of the records, giving up about 0.33%. But there were records elsewhere if you're seeking them, and you can see it on the Nasdaq and the S&P 500. So the Nasdaq getting there, a fresh all-time high and record close intraday. What we saw, Meta, one of the big performing stocks for the Nasdaq, leading the charge higher, and for the S&P 500, it was Microsoft. So tech names, the big tech titans, very much in play. Communication services, the top performing area of the market, and a lot of FANG stocks. stocks to semiconductors, all on the front foot yesterday. To what we're seeing on the Treasury market, quick look at that trade. The yield of the 2-year, 4.18%. We're counting down to the non-farm payrolls Friday to see what impact that has on the interest rate expectations still that the market has for a Fed rate cut going into year end. Santa Claus rally that could unfold as a result. The market's still watching for the potential, given we've already been on a tear on markets. Could there be another catalyst still when it comes to monetary policy? The 10-year, 4.21%. A quick look at the dollar, where we have seen some interesting trades, and we'll talk more about this. Euro, dollar, sterling clearly sliding. We're seeing the European currencies under some pressure. Dollar yen's been stable, though, and in fact, dollar trying to pick up some territory this morning, but that has not moved as much as some of the other trades, and also versus the Swissy. So morning session, this is a slight change to where the dollar has not been making as much territory against the yen and the Swissy. Let me take you to what we're seeing on the Asian markets across the board for the region. It is green and solidly in the green, about 2% higher for Tokyo stocks. Very firm trade encouraged by Wall Street. Hong Kong stocks rallying 0.8, China strong, and you can see the Kospi bouncing 1.7+%, Steve.
Karen, it's hard to see a sector in contraction and go, oh, I'm really excited about these figures. But I kind of was this morning looking at the copy on manufacturing data out of the state. Let me explain. US manufacturing activity remained in contraction during November. Yeah, it's a 48.4. It's negative. You can't deny that. But it came in at a 5-month high of 48.4. New orders expanded for the first time in 8 months. Businesses surveyed, however, warned that prospective tariff increases on Chinese goods would have a bearing on future cost and capacity. But there was a lot in there. For instance, how can I go through this? Okay, so production index increased modestly. Employment index was up from previous lows. Export orders were up from previous levels. So the rate of decline less than in the previous month. So pretty positive. We'll get to our guests on this one as well in a few moments' time. Fed Governor Christopher Waller, this better be good. The team know how I feel about Fed speak. Christopher Waller says he expects the central bank will cut for a third time in a row in December. Okay. But warned progress on tamping down inflation may be stalling. Okay. This after the latest CPI print for October showed an increase on the prior month. Speaking at a policy forum in Washington, Mr. Waller said, quote, I feel like an... Oh, I do like the quote. Well done, David. You did fight for this. I feel like an MMA fighter. Hopefully not the one that's in the press at the moment, though. I feel like an MMA fighter who keeps getting inflation in a chokehold, waiting for it to tap out. That's what they do, isn't it? They tap out. Yes, that's right. I haven't watched this sport. Yet it keeps slipping out of my grasp. But let me assure you that submission is inevitable. Inflation isn't getting out of the octagon. Oh, what a great quote. Let's have a look at the dollar. Where is it trading? Any time now, Roger? Yeah. Okay. Dollar index 106.49. I think it was up 6 tenths just then. Dominic Bunning, head of G10 FX strategy at Nomura International, joins us now. Well, it's nice of you to turn up. Where have you been for 6 months?
I've been in a chokehold somewhere, just about tapped out, and I'm ready to go again.
Do you watch MMA? No. Do you watch MMA?
Not particularly.
You and I watch
boxing,
another sport, of course, which is Karen equally hates. Okay. Let me go straight for the key question I want to know. Yeah, I cannot believe, and I said this to Karen a couple of weeks ago, and we had another one of our brilliant rows about volatility in FX. I can't believe that the euro-dollar pair isn't looking forward to a challenge on parity. The way everything is, every bit of news I see on a daily basis, I could make a case for the dollar strengthening, the euro weakening. What are your thoughts?
Yeah, look, I mean, the dollar should strengthen. I absolutely agree with that. Whether it's because of the Trump tariff threat, whether it's because of the monetary policy divergence, although interestingly, Waller sounding a bit dovish overnight. We've got a bit more of a hawkish view than the market, and it seems than the Fed does for what they're going to do over the next few meetings. But I do think there's a bit of a risk here where we're going into one of those cycles where all of the news looks terrible. Everyone jumps on the bandwagon.
On this side of the Atlantic.
Yeah, exactly. Where everyone thinks, tell me a positive news story about Europe. You can't find one, right? No. And those are the very moments when expectations are so negative that actually, everything's basically priced in. We saw it in late 2022, right? It was, October. People were talking about Europe going into a multi-year long recession because of energy prices, etc. Yes, things were bad, but they were never quite as bad as priced in. So I don't think we're quite yet there yet. I don't think we're quite at those extremes. But we're certainly seeing with our discussions with clients, with flows, etc., that I think the market is already very bearish on the euro and very bullish on the dollar. And I do think we do edge towards parity, but for me, the conditions to break through there really have that big structural move, they're not quite in place.
Yeah. Okay. You can see it in terms of the news flow, right? You've got very bad numbers rolling through on the manufacturing side, on the economic side in Europe. You've got policymakers set to cut again into next year, and you've got a dose of politics on top in two core countries in France and Germany. So, it's pretty big black cloud, isn't it, when we talk about Europe versus the Trump trade that seems to be bolstering the dollar at every turn. In that equation, why is cable also being dragged into the mix? Because it's charting a very similar chart to what you're seeing on euro dollar without as extreme downfalls in November, but it is a very, very similar chart.
Yeah, I mean, actually, I think the UK data has softened a bit more than we would have probably expected, to be honest. I think, the numbers around the budget, the confidence data around that has certainly been a bit softer. And I think, what you've sort of also seen is that earlier in the summer, there was a lot more optimism around the UK, a lot more positivity, certainly from a currency perspective, trading at much higher levels, investors generally looking to be long sterling relative to most other G10 currencies. So there's been more of a pullback, there's been more of a room for a pullback as well. Whereas, for Europe, people never got that optimistic in the first place. So I do think part of this is kind of just taking some steam out of the initial strength that we had in sterling. Do we continue to drift lower? I mean, we're a bit more cautious as to how far we can go. We think sterling probably stabilises a bit sooner. If you look at some of the interest rate sensitive sectors of the economy, housing, consumer data, they're actually looking pretty good. So that might suggest the BOE doesn't need to cut anywhere nearly as aggressively as the ECB over the next few months. And I think that does provide some support to sterling relative to the euro.
So the other element we're here talking about is really the strength in dollar. So dollar is king, and that story is really, I guess, whipping around in terms of global currencies. What happens next year? Because Trump takes the keys to the White House again, and we've so far already seen the megaphone that he's been using about, hitting back at the BRICS, see if they're trying to create some other currency to trade around the reserve currency of the world. We're seeing in terms of his trade policies, and everybody's doubling down on the dollar is king story. Do you think that has further room to run when he does actually start to enact policy?
Yeah, look, I mean, I think firstly what I would say about Trump is, I'm sure Steve will remember the adverts, he's the Ron Seal president. I think he will do exactly what he says on the tin sort of thing. He believes
it's when I quote adverts from 1984.
Spam, things like that.
Hanson, spam. That was like 1945. No, when Hanson, remember those ones? It's a company from over here that's doing rather well over there. Do you remember that one with the Union Jack and the... No,
might have been before my time. Anyway, but Trump will do what he says. Particularly, there are two things. He has things that he wants to do and things that he can do. And where they overlap, that's what he'll do in our view. So tariffs, clearly he wants to put some form of tariffs in place, and it's very easy for the president to do that through executive order, etc. So look, firstly, we do think tariffs are coming. They're coming relatively quickly, and they're probably coming in pretty decent size. And look, when you think about the impact that has on the dollar, there are two angles. One is that it probably makes US inflation a bit higher than it would otherwise be, and that pushes up the dollar through the Fed's reaction function. And two, you kind of need a bit of an adjustment from the other currency on the other side of the equation to soften, just to offset some of that tariff as well. So both of those forces should see the dollar strengthen on the back of tariffs. We're not really of the view that this is just a negotiating tactic. I think it's very clear that this is what Trump wants to do. This is what he will do early on in his presidency. So I do think the dollar does have room to strengthen in the first half of next year. But like I say, I think there's a little bit of a cap at which it's going to be harder for that strength to really accelerate. I think we're kind of getting closer to that point.
Give us another exciting trade. I mean, obviously, we've concentrated on the European currencies versus the US as well. Let's just try and do both. Mexico and the yuan and the peso. Just give us those.
Yeah, no, I think China's caught up in the same as Europe. Clearly there's a bit more of ability and a desire to manage some of that currency weakness. So we're definitely seeing that come through. There's been a bit more of an adjustment, but clearly policymakers in China do not want to allow the currency to weaken too quickly. Partly from a confidence perspective, they've been trying to shore up domestic confidence anyway. So again, I think we'll get an adjustment, but it will be a bit more of a slower grind. Mm-hmm. Mexico, I think, is a really interesting one. It's already factored in quite a decent amount, again, of the negativity. How much Trump will do. I think these are the areas where it is a bit tricky, because the impact on domestic consumer prices of really ramping up those Mexico tariffs would be a lot bigger than, say, what we've seen in the first administration. So that really hurts from an inflation
forcing
perspective.
all the employees out as well will cost a lot. Will be a cost on the employment index.
Yeah,
as well.
Exactly. So there are two sort of negative sides to that trade in terms of potentially higher inflation, softer employment, that I think, even Trump with his kind of views, there will be elements of pragmatism within the administration. So, Mexico I do think is a trickier one to play because there's been that's one of the areas where maybe there's more bluster than there is going to be hard policy. I think on some of the other currencies there's more room to be to actually see more of a follow through. I think one of the currencies we think is really interesting is the yen as well, which we're very bullish on. Yeah.
We're well off the highs, right? It feels as though the BOJ is going to get a bit more active thanks to some of the Tokyo CPI numbers. So what's the ability to close the gap towards the highs we've already seen so far, even in 2024?
Yeah, I mean, we outside of the dollar, the yen is our favourite currency in G10. I think there is a real divergence here. I mean, I guess you call it convergence actually between the BOJ actively hiking policy, getting back to normal neutral interest rates from the bottom up, so hiking rates, whereas everyone else is coming to neutral from the top down. And we think there's real ability for that to play out. We see the BOJ getting to 1% by the middle of next year, and there are arguments that could even be too conservative given where inflation's running, given where wage growth is likely to be. And I think Governor Ueda as well has been actually a lot more forceful in his actions than maybe his persona and calm demeanor actually would suggest. They really have tightened a lot, and the yen is still the cheapest currency in the G10 space. There's still going to be potential for a lot of inflows. FX hedging behavior is starting to turn amongst locals, which is going to potentially provide a bit more yen inflow as well. So we're very bullish on the yen. We've got
starting to turn as we get older and they repatriate because they need to buy themselves more goods in their dotage.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.